Let's go ahead and do some back texting. The only thing is there'll be no red lines. Unfortunate, but it is what it is. Yeah, it won't be very. No, it'll just be without the red lines. It's fine. That is all good. Yeah, I don't know, man. Back testing on this thing, even the last month high, the way price behaved here versus the way price behaves here is clearly different, right? Like, clearly different. And there's no way to go 5 minutes past. Man, we're in what? We're in November that time, right? Damn. Bruh. Why can't we go back on the contract like a little bit further back? You know? Why must it be only to November? Why? See? It's only till October. Man, doesn't go further back. Cause yeah, I think cause it's broken up contracts, it's kind of weird. It's weird to say, you know. Why? Why? Very interesting. How does SPX have notes? I didn't put the notes here. Anyhow, let me see. So 4136.14. Market close at 14. Exactly at. Is it the SPX that people use then? 1355. Yeah. Let me see. Alt H 4150. Let me see. No. 4150. Bruh. 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 Get this shit out of here. Get this shit out of here, bro. SPX my ass. What's the volume on this? 2.195 billion traded today. Get this shit out of here, bro. Get this shit out of here. Trash. Oh, let's just back test with what we got, right? I think we already did up to. Before we'll just get this monthly and daily and whatever. That'll be the October. That will be the October monthly low, monthly high, weekly, week high, week low. And then we've traded past, we've gone past a couple of these, I believe. So I think we traded 1 week actually. Let's go all the way to Tuesday, Wednesday, Thursday, Friday. Let's go back to the weekly and readjust that. Oh, that's this week now. Okay, okay. And another thing we just started adding was daily. So we'll do that on the thing itself though. That's 4, 5, 6. Alright, so another thing like I said we just started adding was daily. So we'll add a day low here. Add a day high here. Call that day yesterday high. And yesterday low. And let's give ourselves more lines. Alright, that's it there. Last week and last month high are basically the same. Quite the resistance up there. Alright, let's go to the 15. Give me 1, 2, 3, 4. Because there's no volume, so we also want to take note of if there's volume coming into 6 o'clock, maybe we'll trade at 7:30. You know? Actually, we should just stick on the 5 minutes to know that. But yeah, there's no volume coming at 1 o'clock, but there's no real volume here. So coming at 8:10, so that's 8:05. What volume will we see? See price dropped. See there's good bullish volume as much as there is bearish volume. So if price comes up here, want to see if there is going to be a long opportunity. And if price, so this was a base that was used there, it's not bad. And if price comes down, Price comes down, then from here we'll look for price come lower, and then we'll like to reach this low, but we won't mind this low here. So let's see. Oh, nice rejection. Plus the red line plus yesterday's high is right there too. So very nice rejection. That's the high I want to risk off of. Yeah, and that's yesterday's high anyway. So that's the high I want to risk off of. Good rejection, but not. I won't take that. This is a base that formed here. It's not bad at all. Well, we won't take that base either. One price come to the lows here before we decide whether I want to take it or not. Price has formed this low here, but again, one price come down here. Price didn't really come down here, but ideally, would one price come lower, one price will break the low, but given that price has formed this, if price breaks this low and shows still rejection, we may take a trade risking low right there. Otherwise, let's see how price behaves up there. Good rejections though, very good rejections. Price looks like it's formed a kind of structure, right? And it's trading within that structure, and it looks like it wants to break this, so it will be weird to go in short, but it's also not the worst in the world. Yeah, might as well go in short. Losing momentum and volume, so risking up there. There you go, price breaks through. We could have gone short on that candle, but we chose this candle because losing the volume there, losing momentum, so, and yes, this high there, so price broke through. Plus the red line. I was risking 100 basically. If you wanted, you could have risked 12 or 120, looking for 240 or 200. So 240 here. Like I said, I want to see price come here and see how it behaves. Oh, that's really good. Yeah, if you're risking 100, you'd have already been out. If you're risking 200, you'd be in break even right now. Pricing for many years, so you could easily just one candle back up. After all, price is bouncing today. This candle wasn't a bad one to enter, but the prior candle was ugly, so that's a no. Next candle was good, but we didn't really get any real entry. Other than maybe this pullback forced entry, but yeah. Price looks like it wants to break now. We're coming in with volume, that's good. There you go. So like I said, if you're gonna go in here, just get above there, that's 100, 200. Got your TP. When this kind of happened, you're like, okay, nice, we've broken through this low. That's what we wanted to see. And when we broke through this low, we got a nice pullback as though it's rejecting breaking that low. So that's good. You could have taken that trade if you're a little bit more risky. But the idea now is because this is low up there, you have to raise down. You just raise down here. Not this low, you just raise down here. Because you're going to be using low of day. So you just raise down here. Or if you had waited, after this volume, you would have been expecting another black candle to show some kind of rejection, but no candle came in. So then volume came in again. I remember nothing formed on the way down, so we're looking for price to get back up here. And then when price started coming back down, maybe at this black candle there, you could have forced your entry, risking low of day this time around, so 14, looking for 28. Or you could have waited for the candle after that one and forced your entry there. Either one would have worked. So right now it's about 12.25. Price is not doing anything. It's moving up, lots of volume. Broke yesterday's high, good for it. Price could definitely come back in this zone here and find some kind of support. there is a doji that formed right under the red line. Ideally, price should be coming back to these highs here to get us back in. We'll be risking down here, but if price doesn't, then it is what it is. Like I said, there is a base here. Price will find something here if it comes back down. Otherwise, let's see what it wants to do. That's a base up there. It's not the best base. There's no break of structure within that base, so we're expecting price to break downwards. But it's found a support there. So now remember that support there. Remember that support there. So we want to see how price behaves in there. If it comes back down, that's where it jumped up from, right? So, ooh, very nice, very nice. This is the kind of candle that looks like it'll feel back down. Ooh, that's really nice too. Kind of want price. Oh, we're done on it. What a nice day. Very nice day. I guess we're done. Oh, Control Z. Let's just delete this. Alright, let's go to 1 hour and let's just move on. We're not even gonna check trends or anything. I think we'll be fine. 5, 6, 15. On the 15 we can get the higher day. High of yesterday is right here. This is yesterday's high right here, and this is yesterday's low right here. Nope, it is right. So yesterday starts from here, so this is yesterday's low right here. I don't think that low will. Oh shit! I had the candle right there. I don't think that low will help anybody, but we'll just put it there for what's it called? Pudding sake. Alright, let's see if we got volume. 1, 2, 3. Oh, prior to the market, prior to 7 o'clock, did we have volume? Not really, just trading. So we'll go all the way to 8. So 740, 45. So that's 755, 8, 805. Like today, you could see clearly that there was volume. You could see clearly from 6:30 there was volume. So that's when one is seeing the volume. Really, from 6:30, from 6 to 6, or from 6 or from 6:30, one is seeing volume. If there's volume, then we'll trade, because volume is very very recent to 7:30, right? If there's no volume, then so basically news kind of thing. Then we'll trade at 7:30, not 6:30. Wait an hour, and then we'll trade. There was no news or volume, so there is a base that formed here, coming at 805. We're watching. See, there's bullish volume and bearish volume on the day, and right here there was very good rejection. This candle looks like we're gonna fail, but there's still this base. There's no wicks to it, so there's this high here. Let's see the next candle. Otherwise, wait for price come down here so we can get a long. Price basically went off of this imbalance here and found something, so that's what it happened. So therefore, if price comes back down, I won't really want it to take a trade off of here. I'd prefer price pulls back to this base here, and then we'll take a trade. So a little lower, and then we'll take a trade long, risking this low here, just this low there. So let's see how. Otherwise, looking for some rejections in there to go in short. That's one. Nope, that's not enough. I think we have our red lines still. Okay, our red lines are still there. Oh, and then there is, I guess, is there an imbalance here that needs to be filled? Nope, there's nothing. It's all being used. Alright, so because this has a, so the only imbalance here. This one was traded, so the only imbalance here, and it's all being used. So right now, the way our price has formed something here, it's pretty big though. I don't like it, but it is there, and that is a very nice rejection. Still not gonna take it though. Still not gonna take it up. Price approaching red line. It was pretty choppy on the way up. There is something here, but price approaching red line right now, and we could definitely use that. Let's see if we get a black candle first. That's a good black candle. Let's see if next candle is bearish. No. Price wants to break above. broke above the red line, formed a base here that could be used. I actually like that. I think it's okay if it breaks. Nice. Actually, it's not bad. It's not bad. I have a base here now, so this high to this high to this low, right there. Is our base, and let's see if price pulls back, gives us some kind of good. It's not the it's not the cleanest base, so ideally we're looking for price to bounce off of inside the deep inside the base. But let's see what we get. Price is forming dojis on the way up. There you go. But the prior candle is ugly, so wait another candle breaks through. That was very good volume. Maybe we could have even taken a short off of that volume. Does it align to anything? No. It aligns up in here. Like I said, I don't really think there's anything in here that needs there's like an imbalance. It's fine there. So this volume was really good. You could have taken a short just based off of pure fact that volume came in and was heavy to the short side, and the prior candle was also bearish. You could have taken the short there, risking just above high of day, maybe 13. And this time around, you would have to take the short. You probably want to take like I said, risking a little, maybe 20% of your normal risk, so or 25% of your normal risk. So no, 25 or 30% of the normal risk. So in my case, I'm just risking 10% of the 25 that I normally risk. So 13, looking for 260, and you do get 260. I guess one more candle. That there you go. That would have been really nice because of the volume that came in. That's all. So it would have been a quick trade. You could have easily missed the trade. Easily missed the trade. Because the reason why we are still able to take it, because remember there was still bearish volume on the day. So we know that there are some bears there, and obviously as price was going up, there was rejections, but we didn't get any opportunity to really go in short, and this was the only opportunity to go in short here. If you wanted, there could have been a risky long here. I mean, this is risky. It's also a risky long, assuming this would break up because it's consolidating right under the red line. You could have gone in long here, risking maybe this low here, but I wouldn't. I mean, you could have gone in for a continuation. I don't know. I just prefer not to, I guess. I just prefer not to. I like to risk highs and lows. I don't like to anticipate what would be a base, because sometimes we don't know what type of base will form, what type of mid structure will form. Like this was a base that was forming. Why didn't you get in here? This was a base that was forming. Why didn't you get in here? Like you don't know what type of base will form. So this could have easily done and then broken up. So just let it be, man. But a simple high, it was consolidating. There was a base forming. Not just a base, it's consolidation forming here. Price was ranging here, and then boom, bearish volume, a visible high that everybody sees. Just take the trade if you want, and then you keep going. Sometimes the volume that came in may just wick you out, but this was such a strong volume with no wicks that it was like, yeah, sure. And prior candle was also very bearish too, so that was confirmation. So you could have, as I said, you just risk a little bit above 12, or if you're a little more conservative, maybe to 150. So 150 looking for 300, you get 300, you got 300, and price has just jumped. It jumped from this base. Let's remember this one is now useless. Price did not give. There's room for it to run right back up. So it's very nice rejection off of this base here, and this is a candle that looks like it will fail to the downside. So we're just gonna wait. There you go. Price has failed to the downside. Yesterday's high. Not a bad point to actually get in long off of, given that price is at that base at yeah, the low of day was around here, but these are the wicks. I guess you could wait for price come to these wicks and then we can race down there. Let's see. So price has touched the wick, not much rejection. That's really good. So I guess we're using low of day instead. Oh, prior candle wasn't the best, so give it a black candle. There you go. So you don't want to just use price has rejected yesterday's high. I mean, if you went in here, then the next candle that showed was pretty bearish. Just let it go. Just Well, if you, because I wasn't trying to use this base. This is not my base. This is not what I want to use. Prices start moving from here. You could try and use there, this week's. So this was the start of the week. Price did reject it, but the this candle was not the best. So we need two confirmations, right? So we didn't get our second, and price just continued going down. This candle looked like the type that would fail. So again, the base, one base going deep. So it went in deep to the base, this type of base. But again, like first of all, this is not, we don't even like the base at all, and it's close to the day's lows. So might as well just use the day's lows, right? But hey, if you are taking a trade because the base was there and it bounced, it closed above the yesterday's high, then you might as well risk down there. And if you had risk down there, below the day's low, then this next candle that happened, you should have been very wary. Like, what the hell is this? If you're in 25%, you know that this may easily come down to here. You want to see how it behaves here. You could have gone and reduced your 25% to 10% risk. And then if that, what's it called? If once this kind of happened, you may have rushed in and went back in your 25%, but I would say what was the previous kind of like? It wasn't good, so you're still only risking 10%, so you'd have lost only 10% on the trade. You could have taken a loss or you could have avoided the trade depending on the way you trade and where your mindset is at and what kind of risk you're willing to take. Because I don't like this base at all. I wouldn't even consider this a base because it's so close to the low. I might as well just use the low. That's the way I would think. It's a base. Yes, it's a base, but the low is right there. Why am I stressing to use the base? Because this type of base I want to come deep anyway. So might as well just let's just use the low. And so the low didn't give us an opportunity. That's all it was. Price did form something here. Time is just 12:20. Let's see what price wants to do. Prior day, there is something here where price really ran up from. So let us watch what price wants to do around here. So there's this point where price can run up. So there's definitely this point here. If you want me to draw the line, I can draw this. This is a good point there for price to bounce off, and then the low of the day. So just the normal low right here. It's also a good point for price to bounce off, and that's 75. 75. That's also a point at 75 too. So that's not bad. Let's see what price wants to do. The price has formed the base, yes. So even if price runs up, that's only where we expect it to go to. Oh, it didn't give us an entry. It just ran up. See? That's stupid. Anyway, let's look for a short. Price can be very annoying. Like sometimes price can be very frustrating. It's your job. It's your job as the portfolio manager, as your portfolio manager, as your trader, as your risk manager. It is your job to not let price get to you, even though you don't get the opportunity to get in. You add your analysis, blah 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 blah. Just let it be. You didn't get your trade. Don't go, being crazy because you didn't get a trade. Just let it be, man. It happens a lot. So we have this base up here. This base has just been bounced off of. We have this base up here. Up here. Come on, bring this from this week to the bottom week there. And this type of base where one price go inside. So it has gone inside now. This is not much rejection, but I like this rejection. Give me another one. It's not the best, honestly. We can risk up here though, but it's not the best at all. 12.45. We'll just take a 10% because I don't really like it like that. It doesn't seem like a bad one, but it's not really the best at all. It hasn't broken the high, it hasn't even closed above the base, but let's just take that trade then. Give me this risking 220. See, it's crazy. It's come up to the base. It's closed above this now. Not very good, but it does have a lot of rejection. So let's hope we get it to pull back down. Nope, we get stopped out. See, so I didn't like it. It wasn't looking good at all. So if you are taking that out, I've been a loss. If you are even, this was also a candle that I've drawn you into that doji there. So even if you didn't take it this one, you may have been. Let me just get this here. And if you are getting that there, this is why I don't like this type of base. They're a little a little interesting, to say the least. So once price close above this base here, you may have wanted to just stop out after the second close, but if you were willing to take the risk, then it would have been a loss. It's that simple. Like, don't stress it. Sometimes you lose, sometimes you win. Price continues back up. Now let's wait for price to come around here where it really dropped from. So remove this. Sorry, traded through. Remove this. We basically lost this. Whatever, if you want to leave it like this. And let's wait for price to. Let's see what price wants to do there. What's time? 13:35. Well, I guess we're not trading anymore. We just let price do what it wants to do. Came close back below the red line and just dropped from 13.50. But that's after markets closed, still dropping. Alright, let's go to the 1 hour and get another. So this was a Tuesday. We're doing up to Friday. That's 4, 5, 6. Go back to the 15. We're not really doing much on the 15. We're not putting those black lines anymore. Because I started putting yesterday high, I started putting yesterday low. So the black lines will just be extra kind of thing. So yesterday high here. Yesterday low here. It's black, this box. That's that. I could put a black line here, but I think I can see it on the 5 minute. Like I don't need to say it's right there or the price comes up there, blah blah blah. So right now there is no volume coming onto the day. There is no new volume. So we'll just go to 15 and go 1, 2, 3, 4, and then come back to the 5. What's 55? 1, 805. Should be 805 right there. Perfect. So this was the point where price really bounced off of. Ooh, that's really nice. That's very very nice. I'm pretty sure. Okay, good thing I come to trade at 7:30 regardless, because got the way price ran up, you want to go in long there because that's where price really, and it was just yesterday price shut up from there. Like you want to go in long and you want to expect price to have some kind of rejection here, here, here. So you go in long and you watch price. That's all you do. You go in long and you manage your trade. If I gone in long here at 7:35, say low, you know, say low, but given that there was no shift in volume, might as well just wait till like 7, like wait a good couple of minutes for market. Maybe you start trading by like 7:50 or something like that. So here is where you're gonna get in. Price broke today's low and still rejected like that. Very good, very very good. You're gonna risk maybe 12, looking for 24 right around there. Got your TP there. Price started to consolidate. It didn't give me an entry short though. And even if you went in long on this at 7:35, which like I said, I would not do. At the bare minimum, we should at least wait 15 minutes before we take a trade if there was no volume on the day. Unlike if there was no news, at least 15 minutes before we take a trade. At least 15 minutes. Ideally, all the way to 30 minutes before we take a trade. So around 8:05, we come in, and then we're looking for a trade, but at least 15 minutes. Just to know what the volume is, like what the volume looks like. That's the whole idea. So if we're taking it there, risking around 11 because we're taking it higher, so we're only risking a little bit lower than, so maybe 12 still. Honestly, so 12, looking for 24. So we didn't get it there. Price consolidated, dropped like a rock, and now we're expecting to break even because price looks like it'll just come back down to where it is. There's no reason why it shouldn't come back down. And now if price is coming back down here, given that price has so coming at, let's say 7:45, right after 7:45, you see that there's this bullish. There's not much bullish volume. There's not much bearish volume. So technically there's volume on both sides, but there's not much volume overall on the market. And then this happened. Now there's a lot of bullish volume, but on the way up, price didn't do anything. On the way down, price formed the high up here. Now price has come down here. We're not just going to jump in a long here because price is not bullish. I guess price is kind of bullish. I guess price is kind of bullish as of right now, but ideally we'll just wait for price to break this low and reject before we decide that okay, we want to go in long, or for price to form some kind of, to give us volume to the upside from here. So price has broken in low. That's a very good rejection, but that looks like a candle that will fill to the downside, and the prior candle was ugly, so we'll have to wait. That's okay. That's okay. Okay, so now that's okay. Give me another one. Can you? Mm, okay. What's happening here? We had this prior candle was ugly though, so we didn't take the trade. We waited. We got this candle here, right? We could have used that, but wanted it to be a little deeper, and the price pushed up. We had this base here. It didn't go far from the base. Came back down now, rejecting still on the way down. So it basically rejected off of this base here, off of this high here, but it's not as though we want to treat that as a base anyways. So, but it rejected off of that. It's pulling back down now. It's come down to touch this here. That's actually not a bad candle. Actually not a bad point there to take a trade, because price, and I think it's broken below. Yeah, it broke below yesterday's low already. It's right there. Wait, why is this? What the hell? Supposed to be yesterday's low. Okay. Getting long there. Price already tried to break yesterday's low. It didn't have much volume to it. But again, this is the type of candle that may fail. So it's fine. We'll just take it at 10% because it's a little risky. It may come down. It really may come down 16. See, that's the volume right there. That volume killing it. You had a chance to get out of there though. So you should have taken that break even. Even had a chance to break even. That volume, not it at all. So you had your chance to get out. There you go. Price broke downwards. You definitely had your chance to get out of this trade since you saw it wasn't working. This was good volume, but once that volume got destroyed, you had a chance to get out of the trade. Either break even or a little bit of a loss. It's up to you what you are strong headed on. And then, so either one would have worked. And again, so right here, it didn't work. Put back down. Price formed something here, but on the way down, there was only this base, this doji that formed inside of this base that was here before. Doji formed. But then we got very nasty rejection, and now price is just going down. So this trade, again, like I said, small loss or break even. This trade was good. It would have worked depending on how much you risked. Up to you. So it would have worked either if you risked a lot, or it would have worked. It would have broken even if you didn't risk a lot. It would have worked if you didn't risk a lot. It would have broken even if you risked a lot, and it would have lost if you were strong headed about your risk and you didn't push break even. So, and then we had this base price pull it up here, or this high, whatever, pulled up here, rejected it, and then once price started coming down here, we were like, let's wait for price to break this low first, and then see how price behaves. It breaks low of day. It doesn't come back on to give us another rejection, so it didn't give us an entry. It just started going up. And on this one back down, we wanted at least two candles coming down, show that you won't go further down, and then it just went up again, and boom, 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 it started coming, it started rejecting all the way back down. So and then this happens right now. We don't really know where to get in a trade, so we just keep watching until price forms something good from the base here, which is not bad. Remember, there's still bullish volume on the day, so price could bounce, bouncing off of these lows here. Remember, we said there was this high, there was this, that was for yesterday, but there was this, so it's possible off of this lows here. We're not trying to use that, but that's what it looks like. So remember we said there was this there was a bullish volume, so price could bounce, and if it bounces, it may bounce well. So right now price could come back to this low here because of this technically a base here, but I don't like it's pretty big. It's pretty big, and we have a lot of full candles in it, so I don't like it. You're gonna look for a bounce on a downtrend. You want to really see volume, and we've not seen real volume yet. We saw it move up, but when it came back to retest, it just dropped. And it's not like I'm just gonna go in short, jump in short because there is price is going down. No, I'm going to hold. Sorry, I'm not gonna jump in short because price is going down. I'm gonna wait for a setup. So, yeah. I just come back to these lows here. Let's see if we have volume off of this. Nope. Not much volume. Oh, price is down. We're done trading for this Wednesday. There wasn't more trades. So just the one, and then there was a break even long here. Oh, sorry, here. Or a little loss, and then honestly there was no reason for you to go in short at any point. It just started going down without giving us an opportunity. The only point you could have, maybe should have gone in short, was when price came back up to this point here and started rejecting. One rejection, two rejection, full candles. Yeah, sure, you could have gone in short and justified down. So you'd have gone in risking 17 or risking 200. So either 170 or 200, and you'd have gone your TP right around here. But yeah, other than that, there was no real place where price would have. So today price formed the same type of base here, and it didn't really get up there. So the base would have been something like this high to this wick here, actually, something like that. And price rejects, pulls up, rejects still. It didn't really drop like the other day, like this current backtesting day, but you can see it still respected it quite nicely because the base just looks clean, you know. But it's a high, not a base. Get that through your skulls. All right, let's go to the Holy shit! Volume has come in at 6:30. So there's that. It's Thursday already, so yesterday's low is basically at the red line, and yesterday's high is basically right there. Alright, so they're both at the red line. See how important the red line is? Stupid. Alright, so we see volume at 6:30. There was news today. Don't care what the news is, really don't give two shits. But price is like very far from all of the price action from yesterday, so let's just see what price wants to do. Ideally we just wanna wait till 7:30 first of all. That's 6 and then 7:30. And so right now price has formed this base on the way up. Give me a second here. Price has formed this base on the way up. So let's see how price behaves in this video. Ideally want to see price going deep and reject, and then we can take a trade off of like probably risking here ideally, but we can just risk here to be safe. So I want to see price going deep into the base and reject. Oh shit, that looks good. But give me another. I think it's going. Oh, I guess we should have just run into that trade. I was playing that trade, but I guess because, well, it's fine. I kind of was playing that trade, that kind of to be the type that would risking 310. Oh, that's a lot. Kind of playing that kind of to be the type that would pull back and give us something, some kind of black candle. But no, I guess price is very bullish. So if we're gonna go in that deep, might as well risk, you know, here. So 250, looking for 500. It's gonna be the risk. But also we have last week's high and last month's high, so there's a lot of resistance up here. So let's see how price behaves. Obviously, price already rejecting. That's a solid black candle right there. Is price going to break? No, price is really rejecting, and I don't blame it. But if you try and go in short there for your sole reason of, oh, there's last week's high, last month's high there, don't be surprised if you see a just that's what. But would he really have that kind of strength given that he's already done all of this move? Who knows? All you can do right now is put yourself as break even and just hope for the best. Price is really, there you go. It's not much, but it broke above. That's what matters. That's what we care about. We'll leave at 500. Where did you go? 500 basic. I'm already out. I load. You know who I am. Wimp. I'm out. Anyhow, all good. So price formed this consolidation here, which makes sense because of this. So if price pulls back here, I don't mind taking a long, risking this low right there. It's not much rejection to that. It's not bad, but give me another candle. Ugh. Broke this low though. I don't really like the fact that I broke the low. When the price comes to this base here, well, I guess we would have actually taken a trade here. Probably have taken a trade there. Because the prior candle after, before this black one wasn't bad. So I've probably taken a trade here. Risking down there as our, so maybe just 20, 27, 270. Price is pretty bullish on the. I don't know why it came back below this monthly points. It's gonna be hard to break again, but let's see. Price does have quite a volume now to the sell side, but let's see. There you go. There you go. It breaks. Closes above. No. Yes. There you go. Okay. We are now. Not now. Now break even. Now we're break even. There you go. So we're risking 270. We'll be looking for 540. Right. 540. It goes all the way up. 540. All the way up there. I'll break even obviously. So oh, and we are done after this candle. Not bad at all. Not a bad trade at all. The reason why we got in here is because price came down. Like I said, price kind of formed this consolidation. We kind of formed this high here. If you want me to draw a black, I'll draw it right there. So kind of like that base there. Kind of like, I guess you could call it this base. So I guess if you look at it as this base, you technically wanted price coming deep, and which it did there. So it's already deep, so it was not a bad entry. But price did break the base. It was annoying, but volume came in to get us back up. And that was the low here, so it's not a bad low to risk. So we raised below the doji there, which is also not a bad place to risk because there was this base here. So there was a good chance price would bounce back up to break us, even if it had come back to retest this low if it wasn't strong on the move back up. Like yesterday here, price wasn't strong on the move back up. I guess there was this, no, there was this volume, and then boom, that volume destroyed. So on the way back up, it wasn't strong. There was no volume, so we just broke even, or we sell for a small loss. But here, when he pulled back, when he broke below this base, here, good volume and continuation. Try to drop volume, continuation. So that's what kept us in the trade. Alright, that's Thursday. Let's give us our Friday, and that's it. 6 on the dot. Go to 15. Delete this black zone here. Go to yesterday. It's high. It's just a high. Yeah, yesterday's high is just this point here. And go to yesterday's low. It's technically basically the same point. So I might as well just leave it there. It's not gonna be important. I'll just put it here. Whatever. It's not gonna be important though. So go to 15. I don't go to 5. We don't have any volume, so go to 15. 1, 2, 3, 4. I'm thinking. Okay, so we don't have any points. So yeah, the other day we had a point where price really bounced off. So where we're waiting to, we'll be watching that point. But right here, we don't really have a point that's crazy like that, only down here. So we'll just be watching. There's 3, 4, 5 minutes, 7:55, 8:10 there already. Okay. But coming at 8:05, we see that one price come retest here. Price at the base at 8:05, price at the base. But with this candle at 8 o'clock that is weakening the whole of Jamaica. Why is it Jamaica? The whole of the equator. Not Jamaica, threw me off. Bro, sheesh. Anyhow, it's weird. And well, yesterday's high seems to be respected quite a bit. Boom, 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 boom. It's not bad at all. So we like the line. Let's see how price behaves around it. So it's the point where price started dropping from good rejection there with, but the prior candles are interesting. So we'll just keep watching. I don't know. Prior candles are interesting. They're not. I don't know. I don't know what to do. I'll just wait because I want to reach this high. I'll just wait. I'll just wait. Another good rejection. Another good rejection. Price has formed this here. It's very interesting. I don't think it's safe to go in short because I don't know how price will react if it comes down here. It's not like a straight up long. I guess on this move up here, price could come back down here. Because price is rejecting quite well right now off of this. But let's give it one more candle. I don't know. It's pulled back. It pulled back to this point here, and it's actually not bad. The risk is all the way down here, so we kind of want to wait to get a good entry, but because otherwise you're risking 300 points basically. Good entry. Not bad with the wicks. I'll take that. I would prefer it went a little lower though, but I prefer it went a little lower. Okay, maybe we'll take. But that's a doji and whatnot. It's not clean. We'll just wait. Give me a little lower. There you go. No rejection though. Not good. From the base there. It's below the yesterday's whatever. Yeah. This was where I was really called to take that trade, that black candle here. But given that it's not low, because the reason why I want to take it here, because that's the start of the weeks. So I would have taken it, it would have been something like in here, risking down there. So risking 180 or basically 200, let's just say, looking for 400, right? That would be the risk. Looking for 400, I would need price to really go all the way up there. Or I could have waited, right, which I did. Price came here from this doji, but the prior candle wasn't the best, so we waited. Next candle wasn't the best. Price from this base here, but nobody cares. It wasn't, it wasn't crazy or anything like that. So actually, this candle here wasn't a bad entry, given that it looked like one was to break the base at that point. So it wasn't a bad entry to get in on this candle right here. And then when price went up, we formed the base here, but that base is too big and it's too close to the low. So it wasn't a bad entry getting on this black candle here or on this point, finish up on one of this entry. So both points will be risking 400. So let's just see. Actually, if you had waited for this low to form and then got in on this black candle, you would be more okay. I'm gonna risk just the low of this, so more like 17. So 170 looking for 340 is what you'd be more risking. Versus if you had gotten in on this point here when there was no low that formed, you will be more okay. I want to risk low of day and a little bit more, because at this point you are risking this low and this low, which is what makes it more. Because if price breaks here, it could break and come to the low and then rebounds. But after those weeks, it's like it may likely not break anymore. So we only have this trade so far today because price is a little weird. If we did force the short here, so that candle, if we took that candle short there, risking higher day, so risking 14 or 15. Let's say 15, we'll be looking for 300, which we almost basically got there, right? So if we're taking that trade, let's say we're risking whatever 14, we're looking for 280, we would have gotten that, right? So that would have been, because we didn't take it here. The reason why we didn't take it, because we're like, how would price react on this whole thing here? Is very interesting. That thing was very interesting here. If I had forced this trade, clone here, would have waited, would have gone in profit, came back, gone back in profit, came back, and then break even and taking profit. And so in that case, we'd have had to wait for this trade. So this would have been our trade, not this one. It would have been this one. Because right here, I expected price to go lower, to be honest. But I also expected price to give me an entry point when he went lower. It just didn't. So it bounced and then gave me an entry point here, which is like, it came. Why is this an entry point? Because there was a base that, there's a base that formed here after I pulled down, and it looked like it wanted to break the base. So this low is there plus this low, so that gives us kind of an entry point there, and then we can risk looking for 400 on that. Or we could have waited. So now this whole base is here, price pull back, getting in here, risking now the higher low if you want. Like, it's, you got quite the amount of entry points on this. So looking for 400. On the way up here, price has formed this black line, so that may be something to react off of. And it did come to react off of it. So, but we're definitely not taking a trade off of that. So 400, we're looking for 400, no, 340, right? 340. If we're taking it from here, so that in 340. And we got 340, right? There you go. I'd have 2 trades on this one here. So coming in on at 810, 805 here, we realize, okay, there is some bearish momentum. We also realize we don't want to take a short right here at this candle because we're risking all the way up there, because right here is really close to this base that this consolidation that formed in here. So I want to wait for price to go a little higher and give us some kind of really good sign that it wants to drop. Otherwise, we're more afraid of this base that formed here. So that's what this candle gave. This very weakish candle here. So we're getting short there, risking higher day. It gets, and what our fears may have actually just taken us out of the trade, or after this candle we had a little bit more faith, because when it came here it reacted the way we expected it to react, that it's gonna hold this base or it's gonna pull back. I expected it to pull back down, but if it holds it from here, it's also because the yesterday's high is there too. Like, things may happen that you don't like, and then but this candle really came as a reinforcement to your conviction. And then we had a rejection here too, also nice. And then the next candle just gave us all we needed. And after that candle happened, no way I'm not breaking even. Breaks this low, breaks it, I'm breaking even. You can kill me after for breaking even if you came back up and went back down. But for right now, I'm breaking even. It then formed this base here, this strong base here, countering this base here. Not countering, but whatever. Let's just say countering. So it doesn't form this base here, but there's also this base here with the wicks all the way down here. So by the time you get out of trade again, get in here, risking down here. You want to see how price behaves here. It doesn't behave too bearish, but not necessarily here, not the base. Ideally, you want to see how price behaves here. Comes in here, comes in with more weakness on this candle. Next candle was also weak, but then the next candle, the one that actually touched the first wick, was actually more bullish. So that was more bullish, and then this one was bearish, but the prior candle was bullish, and this was a little bit more bearish, but I was still not going short. I'll just hold it long. That's just a preference based of the way price trade. It's not like it's not a base, it's just a high, and price is bullish on, not necessarily bullish, but price is uptrending basically at that point, and price did look more bullish on the day, so it looked like it would technically break that. It just looked like it would break it, right? So I'll be more willing to give it 1 or 2 more candles to wait and see if price is actually rejecting ferociously from that point. Just like today, we could have, if you're taking a trade here, risking this high. You are not necessarily wrong. It's just, yes, price may drop, but is that when price is done with the momentum that it has going up right now? So if you waited, price came to touch this week. By the time price touched this week, it rejected. Good. You could have, like I said, taking risking that high. Good for you, but we shouldn't have. And if you had waited for this week when price came rejected this week, nice. But is it really done? Next candle was now black. Okay, that's definitely hinders momentum to the upside. And then waited for the candle after that, that candle was actually now rejecting. Okay, we can take that. They're risking higher there. Like, it's, you don't need to stress much about some things. And then we get this move, and then we come back here. Price breaks this low with a lot of rejection, and what's it called? This is the type of candle that looked like it would form more moves to the downside. So if you are taking this trade here, like we took, just because price broke this low and rejected, and then this kind of uh, um, rejected, you could have taken a trade like we did and risk down there. That's still not bad. But once this kind of started forming and went all the way back down here, I would say it was, even if you waited till it closed, it would be better for you if you had just gotten out of a trade with a little bit of a loss. Like, that would have been your best option, because that candle took out all the momentum here, and that is not good. You don't want to even find out if the next candle would go back up. Like, that's not your business, honestly. Just get out of the trade. But if you didn't get out of the trade, you also didn't get stopped out, and you still went back in profit. Well, good for you. But if you are getting out of the trade, because if you didn't get out of the trade, you won't be able to get into this move that it showed here, holding this last month's high, because last month's high was a very strong point where price really does a lot of range from bouncing off of it. So he held it here, closed below, closed above, held it here, very long candle, looked like it was supposed to continue, but it didn't continue, and then you take that trade at that black candle there. For that trade, you do get your 2 hour. For this trade, you get a little bit of, let's say you're risking 25%, you get a 5% or 6-7% loss, and then you get 50% on this trade. Like, it's a no-brainer. It's up to you in the end. Because price could have easily continued downwards and you would have gotten stopped out if you had not gotten out here. But for this particular day, you were safe. You got in here, like I said, and good for you. Oh, price is not even done for the day, but honestly, at this point, after getting out of this trade, you're like, where do you even want to? There's not really any point to continue this trading, but let's just see what price does. Continues going higher. So if you had not really gotten out, you would have kept on holding. If you're risking, 17, 18, whatever, you would have gotten whatever you're risking, whether it's 20, which you should not risk more than 20, but if it was 20, because 20 was under the red line. So if you wanted to just be a little bit more safe, I'm going to risk 20, 200 under the red line, you get your 400, right? You still get your 400. So, and then you're in the trade to like 1240. At that point, you're like, okay, price uptrending. Oh, look at that volume that came in there. But it's not thick and full. It had rejection on the bottom. So it's not convincing to quickly run in short, and plus it's already 1 o'clock. So at this point you're probably done trading. But if you wanted to say where will price likely bounce off of is around here. There's a low here that price shouldn't break, but if it does break that low, I doubt it will break this week here. So let's see what price wants to do. It did break the low, but it did not break this week here, and that's it, man. Like, price action is not rocket science, because this is a good um you could call this a higher time frame base, or you call this a base, or you call this just a consolidation. It's a good consolidation that happened here, and in that consolidation there was a high that formed. That high and then there was this low, and prior to that there was this wicks here that happened. So you could just call all of this one solid low, and the low is right there. So if you took the trade here, you're not risking here. If you took the trade here, because you're a little closer to here, you want to risk maybe just down here, because price also should interact somehow on this. So you have taken that trade and you'd have gotten some pennies, get some pennies and call it a day on that, on your pennies, because right now it's 125 and you end the day okay. Get your pennies right there. Maybe you risk whatever 12, you get 14, 15. Once price comes back to this high, you should be looking to exit your trade, especially given the fact that it is end of day. So there you go. That's the end of today's trading, and it's been an hour and 12 minutes. I will see you guys tomorrow for live session.